How's it going, fellas? Welcome back to Trade Recap. Today I took an L. Not gonna lie, so we could just kind of hop right into it and like what my analysis and my thought process was. So on the 4-hour time frame, I saw that we were pretty extended, so um, I wasn't necessarily trying to look for longs here, but we'll kind of talk about why I should have changed my bias. Um, and then on the 1-hour time frame, you can see that we were overextended by the time market opened, but then we also had this 1 hour for value gap here, right? So, and then we could see that price came down at like 7 o'clock, came down, filled in the imbalance, and also tapped back into equilibrium, right? So this to me should have been like a clear, obvious sign that, we're going to be pushing higher from here because we've already tapped into our high time frame equilibrium. We've already respected our high time frame fair value gap. So to me, this should have been a prime example of we're going to continue higher, right? But I obviously didn't do that, and I took a trade counter trend because I was like dead set on, oh, we're in a premium, we're going to continue lower, blah 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 blah. But now looking back with it with 2020 hindsight, I should have, probably taken a long here today just purely because of, we respected this fair value gap and then we also tapped in this equilibrium. This was basically identical to the trade that we took on the 24th, right? So you can see on the 24th, you can see that we come back down, we tap into our high time frame equilibrium here. We could just consider this a range, well, because so I think I had it like this, if I'm not mistaken. So I had my equilibrium from here to here, like that, right? And then I seen that high time frame, we came in, we tapped back into equilibrium, and this was before market opened, once again, right? So before even market even opened, we came down, filled into this equilibrium, and then we also respected this fair value gap, pretty much identical to what we did today, except I took the opposite trade today and I didn't end up going long. But we could kind of talk about why I did that. So on the monthly time frame, if we just want to come over to here, we could see that back in 1991, we made these highs right here. So that's kind of was like, oh, it's going to be just a liquidity sweep, right? Because we came up, swept out these highs here. See, we take them out here. And then we started to get a little bit of downward pressure back down here. So I was like, oh, that's just a super, super high time frame liquidity sweep. We're probably going to want to end up going short here, right? But we didn't end up going, well, we did take a short, but we didn't end up pushing lower. So basically, the reason I took this trade, right, is because I seen that we could scale down on the 1 minute, right? We seen that we pushed down into equilibrium, pushed down into this fair value gap. That to me should have been a clear sign that we were bullish, right? But it wasn't. Um, come up and then we have this 1 minute for value gap here. See, we disrespect it, closing beneath it, closing through it. So to me, this was kind of confirming my bearish bias. I saw that we had the super high time frame liquidity sweep. I seen that we disrespected this fair value gap, and then I also knew that we were in a premium, right? So I was trying to look for shorts here, right? So I drew out my range highs from here to here, right? I just waited for price to retrace, drew out this fair value gap here, waited for price to come in here, tap back in, and then once I saw that we were coming back down to the downside, right? We closed below this fair value gap here. I entered. We started off pretty strong coming back down, but then within a couple pips of my profit target, I want to say it was like only like yeah, 2 pips of my profit target, we ended up reversing and continuing higher. But I mean, what can we learn from today? I mean, this was essentially the same exact trade that I took on the 24th. So, I mean, I should have saw. I mean, I did see, and I should have recognized, and I should have had the knowledge to know that hey, we've already dipped back into our high time frame confluence. We've already dipped back into our high time frame equilibrium. We're probably going to want to continue higher, right? And you know what? There's not really any excuses that I can make for that, other than it was a bad trade today, and sometimes you take bad trades, but you got to come back from it. You can't let it hang over your head too much. So just got to come back tomorrow, come back better, come back stronger. Um, and you know what? Maybe tomorrow we're not going to be trying to trade counter trend, and if we see something like this again tomorrow, we'll know that we won't make the same mistake again. So that that's really all it's about. Because at the end of the day, like, I'm not risking any money, I'm not losing anything, so it's like I can afford to take these losses and have these learning experiences to be able to learn and get that market experience, so that way I won't make this mistake again. You know. Um, but yeah, man, it's another quick video today. If you guys enjoyed this video, drop a thumbs up, and I'll see you guys tomorrow.